Thank you for stopping to watch my video. I want to teach as many U.S. investors, U.S. business owners, U.S. franchise owners, entrepreneurs, and 1099 income earners how they can save taxes legally. So few people have ever heard of the tax shield method. It's legal. It's in the IRS Tax Code 643B. It's been in front of the United States Supreme Court on 2 separate occasions, and it's won both times. You can't get more legal than that. I personally work for a law firm that was started 77 years ago by a Harvard law professor. Paul Benson wrote 5 separate trusts. We're only going to talk about 2 of them here today. But in 77 years, not a single trust has ever been audited. Now his grandson and great-grandson run the law firm, and they're so confident they're going to give you a certification saying if you get questioned by the IRS, they'll defend you free of charge. In 77 years, it's happened once, but they defended him free of charge and it got approved. So let's get into this. This comes from England way back when King Henry VIII, that famous king who murdered his wives, started the Church of England. Murder a few ladies, start a church. Hey, who cares? He went to go tax the lords and ladies of England, and they went back to the 12th century to the Magna Carta and said, oh, no, King Henry VIII, you can't do this. It's contract law that came to the colonies while we were still part of England. What the law firm I work on behalf of inherited a trust that turned 350 years old in 2023, before we were a country. That's how long this has been around. Our current tax structure went into effect February of 1913. It was only supposed to be around for a few years, but we got involved in World War I. The super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, the Kennedys, made sure they could save taxes. Well, if they can save taxes, we can save taxes. My name is Sally Gimmon. I'm the owner of www.thetrustisyou.com, and I have a free class on the Great Discovery where you take my first name and my last name, and you'll get a 23-minute presentation, 3 articles from Forbes magazine, 2 pages of case law so you can research this to your heart's content, and examples of clients saving thousands of dollars. My personal story: I became a real estate investor in 2018 when my mom got sick. My first property in the trust was a bank-owned reverse mortgage that I bought for $20,000 that was going to go to auction for $50,000. In 2019, I wholesaled 7 properties nationwide, paid off $184,000 in debt, and I had $50,000 in my bank account for short-term capital gains. I was a good little real estate investor. Then COVID struck. Everything shut down. About March 17th, St. Patrick's Day, because my mom's Irish. On April 4th of 2020, my CPA called me to say, congratulations, Sally. You made so much money in 2019, your tax bracket went from 22% to 24%, and you owe $94,000. I had nothing coming in. I had quit my job. I had money saved up. Everything was paid off. Yikes. I took out a HELOC, and I started researching the Rockefellers Spendthrift Trust. It's called The Office. It took me 5 months, and in September of 2020, I started both my business and my beneficial Spendthrift Trust. The business trust is for all U.S. business owners, entrepreneurs, franchisee owners, and 1099 income earners. You will save at least 90% on federal income taxes yearly, and generation after generation. And in 43 states, you will no longer pay state income taxes. In 2024, I personally saved 94% on my federal income taxes here in North Carolina, and I did not pay North Carolina state income taxes. I still pay taxes for gas, for food, for takeout, everything else. I'm not tax-free. I'm just following the rules that are in the IRS tax code. Just to give you an example, one of the examples I use is a 29-year-old single guy in Virginia. He got out of the military. He's a 1099 income earner, and he knew in 2024 he made $150,000 in 1099 income and had nothing to show for it. If he started the trust January 5th, if he makes $150,000 in 2025, he will save $34,598 in both federal and Virginia state income taxes, or $2,908 per month. Who doesn't want to save $2,000 per month? That's the business trust. The beneficial trust is for every single U.S. investor out there. You will never again pay taxes on your profits. I don't care what you do or how you do it, but you will save the following taxes year after year, generation after generation. You will no longer pay short-term or long-term capital gains when you sell something at a profit. Short-term capital gains are a year or less and affect you when you sell crypto, you're a forex investor, you wholesale, you fix and flip, you do auction houses or tax liens. Long-term capital gains are either 15 or 20% when you sell your business, sell an investment property, or sell a baseball card. Interest income taxes are just like federal income taxes, between 10% to 37%, depending on your tax bracket, affect you when you are a passive investor. I don't care if you're in mutual funds, a REIT, you're doing subject to real estate, the BRRRR strategy. I personally have notes where I'm the paper on the house. People pay me their mortgage, creative financing, seller financing, or forex investors. Forex investors get taxed twice. That's why I have a lot of clients who are forex investors. You'll no longer pay dividend income taxes. If you're in the stock market, you're a day trader, you're an options trader, you're a futures trader, you're doing commodities or living off of dividends. And you are no longer pay rental income taxes. So if you have short-term rentals like Airbnb, vacation rentals, 3 doors, 5 doors, 10 doors, 20 doors, 100 doors, maybe you're in commercial property, maybe you have multifamily, apartment buildings, or you're doing Airbnb arbitrage. Yes, you could put a property on the depreciation schedule into the trust. Yes, you could put a property on a cost averaging into the trust, because the 3 ways you save, you're going to save taxes year after year, generation after generation. You're going to keep all your information completely private. I had 6 LLCs when I started this trust and shut them all down. No one told me anyone could go on the Corporation Commission of Arizona 24/7 and research LLCs. 40% of those LLCs, S Corps, and C Corps get sued every year. And third way you save, all lawsuits become frivolous. So if a renter's dog gets out and bites the mailman cannot go after the owner. The mailman can only go after the owner of the dog. And then the final tax you save is royalty income taxes. They're a little bit less, between 10% to 35%, but affect you if you're got talent or if you're in the NFT world. So if you're an actor, an actress, maybe you're a musician, maybe you're an author, maybe you're an artist, maybe you have patents, copyrights, or intellectual property. The late, great Robin Williams had the Beneficial Spendthrift Trust. His 3 adult children now pay no royalty income taxes on all his work. My goal is to teach this to as many people as possible. It's not a need, it's just a want. It's legal, it's in the IRS Tax Code 643B. It's been in front of the United States Supreme Court. Even our current president's father started this trust in 1972. If you remember when President Trump was debating Hillary Clinton and she accused him of not paying taxes, and his comment was, "I'm smart," his father started it. Thank you for watching my video. I hope you learned something new. Start saving taxes legally with the TaxShield Method. Have a beautiful week. Start saving taxes legally with the TaxShield Method. Have a beautiful week.